Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the U.S. mid-session brief, except it's not the mid-session, it's the early session. And we're going to go ahead and we're going to dive into the Trump news cycle. Today is going to be our Memorial Day stream. I won't be streaming on Monday, so I wanted to go ahead and cover a little bit about Memorial Day and Memorial Day weekend. And right now, we're having an absolutely huge day on the markets. We're seeing big-time action in U.S. equities, and we're also seeing a little bit of action, bearish action during the U.S. session in gold. So I'm watching gold closely. I'm watching U.S. equities. I'm thinking about the weekend. I'm thinking about all the different things that can happen this weekend during our news cycle. So I want to welcome everybody back. It's always good to see everybody. Let me see. Trading Musk. Good to see you, Musk. How you doing, Trading King? Trump. I'm recommending a straight 50% tariff on the European Union starting on the June 1, 2025. Yeah, I think that's what we're going to be covering today. I mean, it was perfect. The title of this stream is Trading the Trump News Cycle, the weekend news cycle, and we're definitely going to be taking a look at that. Before we get started with any of that, though, I want to really begin by saying, the importance of Memorial Day weekend here in the United States. A lot of folks just see it as a 3-day weekend, and they go hit the bars and they go camping and they spend it with friends and family, which is great. For me, it's an interesting day. I myself did not serve in the armed forces. My father did. Both grandfathers did. Most of my uncles did, and a lot of my friends did. And so Memorial Day is sort of a big time, and you'll notice I broke out the formal wear. We got the tie, we got the hat. Where I live now in Dillon, Montana, when you go formal, typically you dress up in your real nice hat. So today's sort of a formal day for me, but it's going to be a fun stream. We've got some trade ideas. We've got some news events. Any questions that you have, just lay them on me. I'll do my best to answer. A little bit of trading psychology we'll cover towards the end of it. I talked about taking a major loss last Thursday. This week has been a bounce back week, and really what the discipline is always make sure you have money to trade and you can always fight back. And this has been a good week. I'm not going to lie to you. This morning, fantastic trade on gold. So I'm a happy guy. I'm a pretty happy guy, and I always know that as long as I have a little bit of money to trade with, I'm never dead, and I can always earn. And you guys will get to be the same way. It's just going to take a few years. So US 30, US 100, beautiful hat. Thank you, Musk. I sure appreciate it. Wow, cowboy. Yeah, time to cowboy up. It's Memorial Day. A lot of big rodeos this weekend. So if you're riding the circuit, I know we had a few rodeo guys that would watch the streams. So if you're riding the circuit, best of luck to you. And I hope you get into the money and hit the board this weekend. All right, everybody, let's go ahead and just get started here. Memorial Day is a national day of mourning here in the United States, and it's for all the fallen soldiers that fought in the U.S. Armed Forces. So, if you served in the military, served in the United States Armed Forces, thank you for your service, and we sure appreciate the sacrifice. I'm heading over to see my dad a little bit later today, and we're gonna have a barbecue and try to have a little bit of fun before we dive into what's going to be a tumultuous weekend news cycle. I expect the markets to be highly active and highly volatile when they reopen Tuesday. Remember, Monday is going to be a market closure. And when you get a market closure, you've got to be very, very careful with what you do on Friday. This is the volatility index, the CBOE volatility index. What you've got right here is a major spike. We're up about 18%, and that's because of the saber rattling and all the news. It's really all about Trump. It's all about saber rattling, but there's one other story out there that we got to be really, really careful with, and I'm going to tell you that one here in just a second. We also got some breaking news right now, and that's going to be new home sales. New home sales dropped. This was one of my picks to click. This was a big deal to me coming into the trading week, and I think that it's an absolutely fantastic number. Take a look at that, 743,000 for April. That was well above forecast of 694, and then also well above the previous release of 670. That's a 10.9% jump. That suggests that, hey, those existing home sales, maybe some of those older houses are overpriced. We're starting to see the new home sales really outpace the existing. And what that means is people would just say, hey, listen, if I'm going to spend $500,000 on an old house, I might as well spend $600,000 on a brand new house. That's exactly what that's about. I'm interested to see U.S. real estate and how it reacts throughout the summer. But that was the key event for today. We've got some requests for gold, and gold's been on fire today. Absolute trend day up. Here's a good look at a 4-hour chart. Gold's up about 1.4, about 1.5%. That's a big one. So for me, I'm in buy mode. I want to buy. We took a shot to the sell up here on gold futures, caught the top of it. It was absolutely beautiful. That's a story for a different time. Didn't come here to brag or gloat, but that was one of those trades I was in for all of about 20 seconds, and my trading day is complete. Hit my number, I'm gone. I love it when it's like that. When it's easy like that, boy, it just makes you feel good, and you're getting ready for the weekend. In any case, 4-hour chart. I love 4-hour chart on spot gold, a true 24-hour commodity. And what you've got there is a nice big rally and then a pullback, potentially a pullback bid from 33, 34-ish. I wouldn't call that a high-risk trade at all. I think if you get an opportunity to buy 33, 35s, 33, 35, 50s, you're going to have to give it a little bit of space. And what I mean is you're going to have to go in probably right up in here somewhere because that spread is a monster. It's about 117, 107, 119. It's challenging trading spot gold. If I was trading gold futures, which I was earlier today, you could do a little bit different. You could take a little bit different approach. You definitely want to be aware that the trend is up. No question about it. What would I be looking to do? Pretty much the same thing, guys. Pullback bid on a 4-hour. Very, very good trade. Now, the one thing that I will caution everybody on, and I do believe that we're going there, I just don't know when. I have a feeling that gold, I got a feeling that we're going there now. I mean, not necessarily today, but like maybe on Tuesday's open, depending on what happens with the weekend news cycle, 3,500. So the question is it worth scalping to the short again in front of 3,500? I think it's worth it. Bobby Bob, good to see you. Thank you, Bobby. No, today's a formal day for me, but sort of a big holiday, one of those that I take very seriously. But one of these right here, maybe a short from, you could take a shot at 34.94 again, maybe 34.95. You could do it. But the real question is do we want to do it again? Remember that short from just beneath 3,500, we already hit that. We got in there, we grabbed it, we took the money, we went on to the next trade, and that was how long ago was it? How many weeks ago was it? It was right there. That was absolutely beautiful. I don't know if the sellers are going to be there this time around. Remember, these markets are all about key numbers. They're all about key numbers. And when you get something like a 3,500, you get that compression, the buyers and sellers really slugging it out. You got to be very careful with what you do there, because when those levels break, then we're looking to scale into the long. We're not looking to be short anymore. So if you want to take that short, and the reason why I'm covering this now, I get it. It's $150 up there. I understand that. But when we open, electronic trade open Sunday afternoon, especially after the news cycle I'm going to cover right now, gold can open anywhere. Be very careful if you're holding positions. And if you are holding positions, all the best. I wish you well. Me personally, I'm not into it. I'm not doing that. So in any case, spot gold, I'm buying pullbacks. I would buy pullbacks the rest of the day. I'm not scared of that at all. If you want to take it down to a 30-minute signature, something like this, it's a challenge, because you just had the new home sales numbers drop. Okay, now you got gold sort of rebounding. Okay, that makes no sense, but that's sort of the way these economic numbers work. This would be your Fibonacci retracement sequence for your 30-minute chart. Now, your low right there, that's about 5:30 a.m. my time, 7:30 a.m. Eastern. That was before the news came out, before any news came out. Right there, there's your pullback to 62%. If in fact you wanted to be a bidder down here, I would just go with the 4-hour chart. It's gonna treat you a lot better over the long run. Typically, I've had problems trading the 30-minute chart with gold. I'm looking at range numbers. I'm looking at all sorts of different things, and intraday Fibonacci's for gold aren't necessarily one of them, just because we've seen a lot of sweeps and volatility. So be very careful. 3,500 is the 10,000-pound gorilla in the room. I fully expect us to retest that. It's just a question of when. It's just a question of when. So, I would be thinking maybe Monday. I think really Monday, Tuesday, I think you're going to get that rally. All right. Yes, sir. Good to see you. Yes, sir. Welcome. Let me see. US 100, US 30. Yeah, we're going to have a trade right now, I believe. I was sort of waiting on this one. This is E-mini S&P 500 futures. I wanted to get this 5-8-13 crossover. For those of you that aren't familiar, let's just go right to maybe the US 30 and see what we've got. For those of you that aren't familiar with the 5-8-13, what it is it's a triple moving average approach, where you have a 5 EMA, an 8 EMA, and a 13 EMA. When the 5 crosses over the 8, you're looking to buy. When the 5 crosses under the 8, you're looking to sell. But the qualifier is the 13 EMA. So if I'm going to buy on this crossover right here, price has to be all the way above all 3 EMAs. Very, very important, because a lot of times you'll get into crossovers like this and you'll notice price isn't necessarily above or below all 3 EMAs. You've got to make sure that the price clears all 3 EMAs. Now, it's very important that we understand the 13 is the key. The 13 is the key to this strategy, because what that does, it gives us a broader sense of what the market's doing. It's our trend indicator. So if you start to see a 13 EMA that's flat, like it is right here, it's going to be real tough to trade this. But when you start to see a 13 EMA that's getting a little bit of slope to it, then you've got a chance. Then you've got a real chance to maybe make a little bit of money. And you'll see right there, there was your crossover. You had a potential bid there. I don't believe that bar crossed it over, but that one did. So you had a potential bid there that was absolutely fantastic. And, on the US 35-minute chart, you can do it right now on a 5-minute chart. You really can. It's 8:10 in the morning, my time, 10:10 Eastern. And what that means is we're in the height, we're in the height of liquidity, and we're also just in the height of participation. Now is the time to do something like this. If you want to trade short-term 5-8-13s, now's the time. Let's take it down to a 1-minute chart and see what we got. Okay, we've got a trade brewing here. Now, a lot of folks, I get a lot of questions saying, Shane, you use RSI to confirm the 920, and you also used it on the 9 EMA. Should you be using another confirming indicator on a triple moving average like the 5-8-13? No, I don't believe so. To me, the 13 EMA is the confirmation. Okay, right here, do we have something? Bang, there's your crossover. Price is beneath. Price is beneath. Is it time to sell it? Yes, according to this strategy, we're going to go ahead and sell the market and see how this goes. Okay, there's our position. We took our short. There's our crossover developed right there. Price was beneath all 3. Okay, now it's rotating back in our face. Where should my stop loss be? You have 2 options. You have 2 options right here. Number 1, you could go right above the trigger bar. I don't recommend that. I do not recommend that at all. Or number 2, you could put it maybe right there. Number 3, you probably should put it at that swing high. So something like this, and to be real honest with you, you've got to be very careful with what you do with the crossover. I think I just jumped the gun. It actually hasn't crossed over just yet. We're going to go ahead and let that short run. That's one of the reasons why the coding is so helpful, is it just colors the bar for you and tells you exactly when to get in. But you'll notice right here, this crossover hasn't developed yet. So I'm in a little bit early. Hasn't developed just yet. Not yet. Not yet. See that? You got to be very careful when you're trading these crossovers. It's got to cross over. It has to cross. So if you get a big negative candle here and you get that crossover, you've also got to get price beneath all three. So this trade right here, we can chalk up as a mistake, just a scratch trade, me wanting to get short and show you guys how to trade this 5813. But this right here, see the way it's blowing up in our face? You've got to wait for the crossovers. I thought we had one. I jumped the gun, and it's costing us money right now. Look, 630, 7675. We're going to get stopped out. Bam, out. So what do you got to do? Flatten it? What happened? Made a mistake. Don't make mistakes trading crossovers, guys. It'll cost you money every time. Every time. That's a fact. In any case, but that's a really good illustration of how this strategy is supposed to really function. You wait for the crossover. 5 crosses under the 8, you sell. Price has to be beneath all 3. This is a prime example of how the 5, if it crosses that 8, you're going to have a shot potentially to get short, but price has to be beneath the 13. If it crosses that 8 and price is right in here and it's not beneath the 13, you can't take it. You can't take it. So look at this right here. No crossover. We made a mistake and lost money. That's just the way it is. Don't make mistakes if you're trading crossovers. Know what you're doing. That's why I recommend coding all this stuff. That way, if you code it, the bar just turns a color. You get in, you get out. It's that easy. It's that easy for sure. Let me see. Angelique, hi. I've been trying to get the code for the 920 EMA crossover, and I cannot find it. If you look at the video, it's on the video. If you go to how to trade, send me a private message. I'll see if I can actually find the code. I know I didn't leave a link to it, or there's no PDFs or anything. I just showed you how to build the code, but I do have the code. So, I mean, I can just copy and paste it in a private message to you, and that's really not a problem. All right, so that's gold in the US30, Euro USD. Yeah, we're going to look at the Euro USD here in just a second. So we've got our economic calendar really knocked down. That was the big event, but today it's all about news. It's all about news and what we need to understand, what can happen over the weekend. Now, take a look at our news cycle right here. Trump says a 25% tariff must be paid by Apple. Okay, that's a direct attack on Apple. Trump recommends 50% tariff on the European Union starting June 1st. All right, that's nothing new, guys. We watched the 145% tariff go on China's things. We saw that when the goods arrived to the port, what happened? They got rolled way back. So if we're interested in understanding how Trump works, the only thing you need to know is he doesn't let anybody know anything. So what you've got to do is you've got to put yourself in a position where you get into a situation where, hey, you got to get in, you got to get out. But if you're holding, you're going to run into problems. Especially on a weekend like this. So Trump recommends 50% tariff on European Union. What do you think that's going to affect right off the bat? It's got it just right off the bat on the Euro USD. So something like this is absolutely huge. You're going to have a Euro USD right there. Nice big rally on this week. I mean, really a nice big break this week, and you're up about 1.5%. So for me, I'm buying pullbacks. I don't really see the USD strengthening against the euro given the tariff situation. So if we wanted to bid right now, we could do something like this on the daily. It's just a little bit. It's more of a challenge because of this spike low right here. But if we wanted to take it down to maybe a 4-hour chart, you could be looking to buy. But look at that's where your tariff announcement is right there. It really screws everything up. So maybe dial this thing back to a weekly chart and say, okay, what can I do here potentially to attack price action from a position of strength? Yeah, Bobby Bob, I see you on the Bitcoin USD. We're going to go there next. So right there, spike low, spike high, and then a pullback here, 112.57-ish. Maybe 112.60-ish. You could probably take that trade as long as we just stick firm with 113.77 at the top. You want to play this to the top side. In my view, I don't see the tariffs helping the U.S. dollar. The last time around, they really didn't. You saw the U.S. dollar come off in a big way, and now we're sort of in a situation where the USD, at least the dollar index, is back up right around 199.25. That means that we're up a little bit from our lows, but we're still very, very weak. I would want to be playing against the dollar right now. I wouldn't want to be betting my life savings on the dollar. That's for sure. All right, let's take a look at Bitcoin, and then we got another couple questions there. Fressy, thank you, Fressy. I'm from London, UK, so I hope to capitalize. Right on. Can't beat that. All right, let's take a look at Bitcoin. Bobby Bob has had a couple questions about Bitcoin. How is it good? Is a good idea that we buy now Bitcoin? Well, I mean, we really went over Bitcoin yesterday in detail, and I talked a lot about what what I think the market dynamic is. There's no question in my mind that 110 is a huge level. That was your double top right there, 108.3, and then right there you've got 109.3. So that area right around 110 is huge. And now we're printing about 109.85. So if we were really interested in getting a great deal on Bitcoin, we would just work our Fibonacci's and wait for a deep pullback, which we may get. We may get it next week. You may come down to maybe 97.5. There's going to be a lot of bidders down in here. So the question really becomes, do we want it right now? Well, if you buy it right now, your stop out point legitimately probably has to be 105, maybe 100, unless you're buying cash Bitcoin, and then you can buy it as an investment and hold it. I was really in the camp of 125 being next up for scrutiny. I could definitely see Bitcoin hitting 125. As a matter of fact, I would bet on it. The problem is with derivatives, if you're going to buy the Bitcoin USD, you can't really hold it into perpetuity like if I just went to a cash exchange and put a bunch of money in Bitcoin and just waited for the rally. So you got to actually try to time this thing. And if you have to time it, that means we have to lean on our technicals. So if I'm looking at this on the weekly, using Fibonacci's, I don't particularly care to buy it right now. But if we go down to a daily, maybe we can get a little bit better price action. Okay, there you have it. So there was really your dip, and now you're bouncing hard. So the question really becomes now, do we want it right now? 109.83, I would wait. I would at least wait for 108. Something maybe right down in here. We already got that pullback, though, so it's not guaranteed that you're going to get it again. That could be very difficult. But you definitely want to be available there at 108, 108.21, 108.25. I think that could be a fantastic play. Maybe 108.5, maybe something right up in here. 108.5-ish could definitely put you in a decent position to get long. It's not a bad area. It's not a bad area to be buying. I'm a firm believer that if you're buying somewhere right around 110, you're probably going to be okay. The problem is when you go to that Bitcoin USD and you pile on the leverage, then you're going to have a real issue really holding these things as long as they need to be held. So that's going to be a challenge. That being said, I would much rather be long Bitcoin than short. I don't want to be short Bitcoin right now. No way. 100's gone. 110's being debated a little bit right now. There's no reason for us to stop at 110. We're going to go higher. The real question is how high. I think we go to 125. I'll make a prediction right now. I'll go out on a limb. I believe we hit 125 in Bitcoin by July 1st. That's my guess. Let me see. Okay, we got some comments. Hope that helps, Bobby. Let me see. Fressy, let's go. I used your 15 to 30-minute analysis advice, and it's a game changer. Thanks. You're absolutely welcome. I really do. I hope it helps. Trade well. Be disciplined. You'll be just fine. I'm from London, the UK, so I hope to capitalize. You'll be all right. Just discipline, risk management, be consistent with what you're doing. You're going to be just fine. No matter what strategy you use, those are the keys to doing it. I traded ranges today. Typically, I'll trade breakouts. I'll trade ranges. And as long as you're disciplined, even the big losses aren't that big. Money management's what this game's all about. So you have to be able to sort of take the big profits when they're there and also take the small profits when the big profits are elusive. Today, sort of developing potentially into a trend day. We just got to wait and see what happens with U.S. stocks. Let me see. Musk, WTI. Any chances for a 30-minute orb workshop coming soon? I was thinking about one next week. We get a lot of great feedback on the orb. Maybe we'll do a 30-minute orb workshop, maybe some live trading on WTI crude oil. That's a fantastic market to be trading a 30-minute orb on. We could actually go over the trade setup for right now today. WTI, yeah, we'll look at WTI, absolutely. Calvin, good to see you, Calvin. Just in, Michael Saylor says if you're not buying Bitcoin at the all-time high, you're leaving money on the table. I agree. I think you have to be long at 110. Calvin. I don't see it any other way. I see 1.25 coming fast. I don't know about the $1 million Bitcoin. I just don't know. But we can almost guarantee that by the end of Trump's run here and the next 4 years, the deregulation and the government and institutional adoption of crypto in general is going to be a big deal. And we can definitely, I just don't see crypto going down under Trump. The next administration, maybe. But deregulation is always big for risk assets. And right now they're deregulating the crypto sphere. That's for sure. Yeah, doing well. Calvin, good to see you. Always welcome here. Feel free to drop by anytime you like. I got the formal well rolling this today. This is our Memorial Day stream. I won't be streaming on Monday, but yeah, so I'm all good, ready to go. Great morning trading gold. I had a fantastic trade, so I'm in a great mood. Let's go right here. This is the big one, though. We're going to talk WTI right now and sort of a great lead in to what we're seeing. Now, there's been some really troubling headlines over the last I don't know, last several days. You don't ever want to speculate, on things as big as, all-out wars, war escalations. I don't like to speculate on it because I just don't know. I'm not in the region. I'm not in Iran. I'm not in Israel. I'm not in the Middle East. We are disconnected. We go by what we hear on the news. And for me, studying the news is sort of, it's a big deal. I look at all different avenues. I don't have any contacts really in the region anymore, or very few. So I can't really sit here and tell you what the inside baseball is on any of it. What I can say is this scuttlebutt and these stories have been picking up momentum. Iran warns Israel, U.S. against any attack on nuclear sites. Israel said readying to quickly strike Iran nuclear sites if U.S.-Iran talk fails. Iran issues new warning to U.S. Iran says it will hold U.S. responsible. Iran gives serious warning. Something happened somewhere. I know that's brilliant analysis, but something happened somewhere to where the idea or the rumor began to be floated that there potentially could be a strike on Iran this weekend. Now, we've done this dance before. The limited strikes. We've watched Israel strike in Iran. We watched Iran strike Israel, and these things were, I think it was last fall where we started doing the tit for tat, strategic strikes where nothing really gets blown up, at least nothing too big, and it can't be, construed as an act of war necessarily, even though both nations pretty much are at war. What does this mean? Well, it means if all hell breaks loose this weekend and you start to see major military actions either out of Israel or Iran, you're going to see your markets go absolutely crazy. That's one reason, Trump's part of it too, but that's one reason why we're at 11.5% on the VIX up today. That's one reason why I'm watching WTI start to trend north, because that's just the way that this stuff works. When you get a market driver that could potentially really send things skyward in a lot of ways, then everything goes crazy. Bearish pressure right now in risk assets. WTI, we're going to cover that right now. We've got a nice big rally there. But also gold. What about gold? Gold's up. Nobody wants to go home exposed this weekend. And that's why this stream is relatively important. If you don't take anything else away from it, other than probably going out and shopping for your own cowboy hats, you got to really remember that if you're holding anything over a weekend break, you're taking a big risk. You are exposed to systemic risk. And that systemic risk is when things go haywire and the whole thing melts down, what happens? And typically the markets crash in that type of a situation. I would reference everybody here to COVID. Most of us remember COVID very well. I remember trading it. It was absolutely insane that March. Limit down. Overnight action was crazy. Gold spiking, gold's up, gold's down, dollar up, dollar down. It was absolutely insane. So a strike by Israel on Iran or Iran on Israel will do the same thing. Things will go crazy because it'll suggest that there's going to be a larger conflict or war in the region. Now, what are the odds of that actually happen? I go to Polymarket. I say, well, what are the odds? What are the bettors saying? Well, let's see right here. Israel strike on Iranian nuclear facility in May. Only a 5% chance. Only a 5% chance. The markets right now, the financial action that I'm watching, they're pricing in more than a 5% chance. Now, a lot of that is just sort of hedging against the unknown. Israel military action against Iran before June, 6% chance. So the odds are low that you're going to see that type of scenario. And, I don't want to see it. That's for sure. I don't want to see any expansion of wars and things. It's ugly. It's an ugly business. But right now, crude oil is getting momentum. It's getting bullish momentum. So the first thing I would do, I still love the bearish side of this market, but I would be a day trader first and foremost, and I wouldn't mess around with trying to take a long-term position over this weekend break given the news cycle. And right now, we just took out 61, 63, 38%. That's a big area. That's a big area. That resistance zone right there, if it's broken, now you're looking really to get long and maybe shoot for the 62s or 62.50s. So if I was, in fact, going to go to my intraday chart, I would do something like this, 30-minute chart right here. You've got a nice 30-minute. And, if you're serious about orb trading, 30-minute chart, you start at 9 a.m. Eastern with crude oil. Boom, boom. There would be your break. So if I was looking to trade something like this, let's take it right down to, say, a 5-minute and see if we can get a decent position. And we've already missed it. Right there, you can see sort of that action right there. That was a huge technical level. It's broken. Now the question is what? Do I want to get long? You know, if you want to get long right now, it's a pretty big bullish setup. What once was resistance right here could potentially be support, 61, 63. You know, do we want to bid it? Do we want to be bidders here? Could go limit order right here. Buy limit. Put that right there. Right down at that support zone. Remember, guys, if you're using horizontal support and resistance levels, what once was resistance becomes support. When price breaks above a resistance level, then you're looking to buy from that level as being potential support. Now, that's more of a scalping approach. I don't recommend that as a position trading approach. If you're position trading this, you need to have a bias. You need to be looking at the market, understand all the fundamentals, which we've covered all week long on WTI. And if you get something like this potentially, you know, maybe we fizzle out right here and get a daily close underneath 38%. Then you look to take that to the short. Right now, I'm still bearish on WTI crude oil. I think that we're going to see a major sell-off down in the 50s this summer. I think it's going to come out of nowhere. People are going to be going, what's going on? I think that's going to happen. Now, for right now, going into the weekend, it would be pretty foolish to go home short. You don't want to go home short. Not in this environment. It's asking for trouble. You're going to run into some issues, especially if you have anything out of the Middle East. Any news out of the Middle East, and crude oil could open as high as $70. It really could. So be very, very careful if you're trading WTI now. Your resistance levels, though, to the top side, I have no problem playing any of them, to be honest with you. That could be a sell right there. I'm not a 50% trader, but selling 62s should be good for a few ticks. But that one right there is your premium sell up there, 62.59s, somewhere right in the back into that golden zone. That could be absolutely fantastic. All right, everybody, let's see. All right, we got one more, and then we're going to go ahead and put a pin in it. Until next week, I'll get the schedule out here. I'm inside the trading room, but we'll be back live Tuesday-ish. We just got to see if we're going to do a workshop. We'll probably do another workshop. People seem to really like those. Let me see. Trading Musk, Apple. All right, let's go ahead and take a look at Apple. See, you got to wait for those crossovers on the 5-8-13. If you don't wait, if you're not patient, it could get very expensive. You got to get the crossover, else you don't have a trade. Apple. Rallying since the open. Sort of a big announcement. You know, markets have memories. Something like that. Bounced right off of that spike low down at May, so we didn't really make any new monthly lows. You've got an area there. This would probably be the big area down here, somewhere right around 169. So, you know, with these big announcements, the question is what happens to Apple's business? I don't think Apple's going anywhere. One of the ways that I love to look at stocks is the 920. Let's see what the coded 920 has to say about it. This one right here. I don't know what that is. That's yesterday's trade. We just didn't quite get it. All right, let's go to Apple. Okay, there's your crossover. Right there would have been your sell. So you'll notice, you know, that's a 4-hour chart. Let's go to a daily. Daily chart, 920. There's your daily right there. So if, in fact, you know, you're following this stuff, this 920 stuff, the crossover happened before the announcement. Figure that out. Riddle me that. How does that work? So is it a buy or a sell right now? I would be in a holding pattern. I wouldn't be buying anything in Apple. I love this order block down here. I know a lot of you are smart money concept traders. Seems like most of the world is these days. Something right down in there. Maybe a test of that, sort of that area right there. You can see we sort of got the spike low and then the big liquidity sweep higher. You knocked everybody out before we bounce right back. You could see something similar down there right around 175. I don't think there's any hurry to get in here and buy Apple. We're seeing pressure. Our VIX is up. We could definitely be going into maybe another cycle of at least bearish sentiment that has to do with the EU, a potential EU trade war, but I expect that to get settled really quick. 50% tariffs, my guess is everybody will be at the table next week, and you'll hear an announcement of some sort of tentative trade deal like we saw with the UK and like we saw with China, believe it or not. So tariffs are going to keep us on our toes. We don't know how they're going to impact really much of anything in the long haul just yet. As far as what was said about Apple, I don't think it's going to kill Apple. I think Apple will come to the table and play ball, and it'll probably even end up expanding its market share over time. So Do I think it's a buy right now? No. I wouldn't buy it. 920 crossover. I have no reason to buy it right there. You can see both of these buys failed. I want to see a deeper retracement. Remember, we're looking for value. When you're buying stocks, it's all about value. Anybody can sit here and say, okay, equities are going to go up over time. Yeah, but we got to get good trade location. We've got to get value. And what value is buying something that's worth something for a lot less than what it's worth, at least to the long side. That's exactly how I would be playing Apple. I would be waiting. All right. That's a wrap for today. I'm going to go ahead and sign off here for the weekend. I do really want to wish everybody well. If you're here in the United States, it's always a big celebratory weekend, so be careful if you're out celebrating. Be sure that if you want to trade any of these ideas or you want to get in the markets, get in there with Switch Markets. Open a live account for as little as $50. Start out on the demo. Trustpilot, go check out some reviews. There's a lot of reviews there. Most of them are fairly favorable. Just remember that they got a live support team there, so if you have any questions at all about the service suite, just reach out and ask. All right, everybody, I'm going to sign off for this weekend. We'll have a new live stream schedule up in the trading room here momentarily. I just got to figure out what exactly we're going to stream next week. As far as Monday, we will not be streaming. We got to work on a Switch Markets newsletter, which if you're a client over there, you will be getting the newsletter Tuesday before the market opens. All right, everybody, that's a wrap. You have a fantastic session. Trade the action well, and we'll talk soon. See ya.